Rod Crandall here. Thank you so much for tuning in. Hope you're having a great year. We sure are at the agency. We really appreciate your business. We know that you have choice in where you place your business, and we are happy you choose to place that with us. In the next 5 minutes or so, we're going to talk about a wealth transfer strategy for some of your clients and highlight a great company and product that we utilize in these areas. Okay, so what we have found, especially in the financial institutions that we work with, is that there's many bank accounts or savings accounts that are mentally earmarked for future generations, right? And these accounts are generally earning little to no interest. They're in money market accounts, checking accounts, savings accounts, and CDs. Okay, and if you're like most of the advisors that we work with, generally we think that these accounts are they're off limits or out of bounds for us. Okay, and this is primarily because the client needs access to that cash. It's an emergency fund. In some ways, it's their de facto long-term care plan as well. And so often we just recommend that they keep that in cash. While I have no problem and understand that you need to have money in cash for emergencies, as you're well aware, the trade-off there is little to no interest on the dollar, specifically in today's marketplace. So what if you could help your clients still have the opportunity to have the same liquidity that they had, the ability to earn a little bit more interest than they're earning today, and had a death benefit in addition to that that would increase the value of their contribution by 25 to 100%? Would that be something that you might want to consider utilizing for some of those dollars? Not likely all the dollars, but maybe some of those dollars. Well, MTL is one of our companies, and they have a product called a single premium whole life that does exactly that. It can increase the yield from where these accounts are currently getting, and in addition have a death benefit that is, again, 25, in some cases 100% higher than the original contribution, depending upon health and depending upon age. So what do I mean? You know, if you or your client has some assets or an asset that you're not likely to need and it's earmarked for future generations, I would suggest to you that you must consider life insurance. Why? Well, life insurance is generally the most powerful transfer vehicle around, primarily because it's payable income tax-free. So let me give you an example. If my mother passes away and I am the beneficiary of her IRA, I'm not going to be upset with her by any stretch, right? And I'm certainly going to be sad that she's gone. But I've got to tell you, the last asset of hers that I want to inherit is her IRA. Why is that? I'm sure the vast majority of you know exactly why that is. If I take $1 out of the IRA that I inherit, I have to pay ordinary income taxes and I have to pay at my highest marginal tax bracket. Well, for me, that's painful. I would much rather have a life insurance be paid to me as a named beneficiary, and that money will show up to me and my family completely tax-free. Okay? And so the reality is that maybe we should consider what that looks like. And people think, well, but Rod, why would you buy life insurance on a 60 or 70-year-old person? They don't need life insurance. And I understand that, and I think that's a very valid objection. What I would suggest to you is that I agree with you that they don't need life insurance for the reason most people need life insurance, which is really to replace their income, or I call it their money machine. So survivor needs is another way to look at that. Nobody's necessarily counting on them, so why do they need life insurance? Well, I would say they don't need life insurance for income replacement purposes, okay? But just merely as a wealth transfer vehicle, primarily due to the very favorable tax status that life insurance maintains, I would suggest that a 60 or 70-year-old individual who has assets earmarked for future generations absolutely should consider whether or not insurance is going to be appropriate for them in some form or fashion. At the end of the day, that's really what we're often asking for, is merely consideration. If you're like a lot of advisors and a lot of clients out there, we don't really want to consider insurance. We don't want to pay for insurance. We don't want to talk to an insurance agent, and I certainly understand those things. But the fact is it's just a tool in the financial planning toolbox, and this tool is often being ignored And there's what we would consider to be lazy assets, if you will, that are sitting in these savings accounts that aren't being mathematically efficient. And in fact, you guys have seen all the math. If I earn a 1% return in a taxable CD, by the time I pay taxes and adjust for inflation, I'm actually losing money. Okay? And so this design not only does the things that we described by enhancing yield and creating a lift from the death benefit leverage, but it also has the ability to utilize simplified underwriting structures. So again, if you're like most of our advisors, one of the objections is, hey, underwriting can be a little bit hairy and it can take too long and my clients can get upset. And I certainly understand that, and that's something that we pay close attention to here at USAdvisors and certainly in my private practice. But these structures allow for simplified underwriting, and often we can get these policies issued in days, not weeks or months. So with that, if you have a client that you'd like to talk about, or you want to understand a little more about what we're describing here, the first thing you should do is take a look at the supporting material that's attached to the communication that this video is on. The next thing that you can do is you can call me directly, or call Shane Van Patten, or call Andrew Casilius. We would be happy to help you understand how these structures work and why we should consider utilizing them for your clients. It's been our experience that if you're paying attention to just this one strategy, you'll be able to help a lot more clients this year, and candidly, you can drive a lot of revenue doing this and improving the client's position. And once again, that's something very important to us at the agency, and certainly me personally, is what we call the platinum rule, which is to the extent that we can understand and meet our clients' needs, then our needs are met. And this is one of those areas where we can expand the services that we're providing just a bit, and in so doing, we can drive significant revenue to our practices. So lastly, I just want to thank you once again for your trust and for your business. We know you have a choice, and we're glad you choose to work with us.